Switzerland just killed an 80-year-old tax that was hated by the homeowners and loved by people who live in rental properties. But here's the catch. For some of you, the rule will be even worse. I'll show you who wins, who loses, and what you should do right now to be prepared. This affects every homeowner in Switzerland and everybody who's planning to own a property in Switzerland. I'm a former banker myself. We are mortgage brokers and specialized in real estate in Switzerland. Let's go. In Switzerland, there's something called Eigenmietwert in German. It's an imputed rental value. That's a fictional rental income Switzerland adds on top of your taxable income just because you live in your own property. Realize that. Even if you don't rent your property, you live in it, Switzerland thinks, okay, yeah, you could rent it. How much money would you get? Okay, let's put that on top of your income. And so most homeowners get pushed into a higher tax bracket. The logic is people who rent, they pay rent with money after taxable income. So homeowners save that rent. Therefore, they should be taxed on it. And it's also something historically, while there was like the World War, the first war and the second one, they had this new rule, so they could get more money from the homeowners and they needed money. But now it's time for a change. But not every change is good. And how much is this imputed rental value? It's typically 60 to 70% of the market rental you could get for your property. It's added on your taxable income every year, even if no cash flow is being realized by renting it out. In return, homeowners can deduct mortgage interest or maintenance for their properties. Now there's a change, a political change. It has already been done. By 2029, January 2029, you won't be able to deduct some things anymore, and we're going to talk about it because there is a special rule for new home buyers which might apply to you. What is going to change? The imputed rental value is going to be gone. No more fictional rent on your income. Well, we are only talking about owner-occupied properties. The mortgage interest deduction is going to be gone for owner-occupied properties also. There will be an exception for first-time home buyers. The maintenance cost deduction, if you need to do some maintenance, renovations, it's also going to be gone. Energy-saving renovations, it might stay depending on cantons. Rental properties, you can still deduct the mortgage interest or the maintenance costs. Now there are some exceptions if you're buying for the first time a property. You will get a limited mortgage interest deductions of 10 years if you're buying for the first time a property. The maximum amount is 10,000 francs for married couples per year, and if you're an individual not married, the maximum amount is 5,000 you can deduct per year for the interest payments. The deduction decreases by 10% every year. Very important. They decided to ease the entry to home ownership in Switzerland. For expats planning to buy, the timing really matters. So get in touch with us. Who wins, who loses? Let's talk about it. Pensioners, people over 65, they have very low mortgages and they were paying this fictional rental income. So they were losers and they are now going to be winners. So everybody with a low mortgage and low mortgage rate is going to be a winner because this imputed rental value, they put them into a tax bracket and they had to pay more taxes. And so if the mortgage is very low, below 65% of the property value, and if the interest rate is like below 2%, you are going to be a winner. And also the future first-time buyers, because you have this rule of this 10 years where you can still make the deductions. You're also a winner, and you're a winner if you work with us. Losers are going to be owner of older properties which need a lot of renovations, because now these properties are going to be less attractive for new buyers, and also owners who have a high mortgage with a high rate. These are also going to be losers. What should you do right now? You should consider, if you already own something, to do the renovations till 2029. You should also research which properties need a lot of renovations, which don't need it. You should make a plan how much equity you are now going to use and make calculations to see what taxable impact it will have on your behalf. Now you should rethink if you're making a down amortization of your mortgage and pay it back. Maybe it's more interesting to invest that money, and it should be more interesting for you to know now if you're going to make the amortization directly or indirectly. You see, everything changes and it becomes now very individual, and people haven't been prepared for this, even the Swiss. So how should you know it? You have no chance. You need someone who's from this field. We are former bankers. Most people have no clue what's now going to happen or what they should do, because there's a different rule. It's really changed. And you as an expat, I mean, even the Swiss don't know what they should do. They're not able to ask their parents because their parents don't know and their friends don't know. So as former bankers and mortgage brokers, if you are planning to buy a property, if you need a mortgage, you can just click on the link down below and get in touch with us. We will call you and see if we are able to help you. We can do it online via Teams. It doesn't matter if you're in Zurich, Zug or Basel. And then we can talk about your situation and what you should do. And with this, you will have a clear plan. Without this plan, you will be lost and pay a lot of money. And so just get in touch with us and we will give you a plan just for you. Also, bye-bye.